Hi everyone, welcome back to this weekly market update. It's been a while since I do my recording. As you can see that most of the time or the past few weeks I've been posting by sharing on my Facebook page in terms of writing instead of video recording because I'm really too busy to do the videos, but I also don't want to deviate or stay too far away from the market or from you guys who have been looking forward to my posting. Alright, I just want to keep you guys posted what's upcoming for the market, things to watch out for. Hopefully you guys have been following me and hopefully you guys have been benefiting from what I have been posting. So what I have been doing, if let's say you have been following my Facebook page, you can see that recently I have just started my TikTok account. Hopefully you guys it's been there to support me as well. If let's say you have not followed, you can go to probability TA to follow my TikTok account. So what I'll be sharing is that what have been done for 2025, most of the gain, and for example the first two video clip which I shared, right, these two tips is given in my Facebook page before I post or before I do the trade. Alright, so I give you I give you tips of so-called I give you the counter to monitor, and I took an action on a Monday, and what bring me the result a week later. So you can see for this, the first video is basically I make a 10% gain in 3 weeks, followed by a 15% gain in 7 days. And of course, the third video, which is the most recent one that I did on last Friday, first option trading, is a 77% profit, which I managed to catch this good run. But the thing is that doing an intraday trading or one day trading is too fast for me to post in the Facebook page or in the Telegram before I take action on it, especially when we are doing option trading, will be slightly riskier or what do I mean by it's slightly faster pace. But it's always possible. It's depend on what kind of traders are you. Are you sharp enough? Are you paying more attention enough? And what is the skill setup and strategy setup you have been using? But of course, I will still be posting a lot of things like today, this weekly market update. There may be some things for you to watch out in the counter, and then you can actually execute in the coming weeks. So you don't really have to be a full-time trader. You can be a part-time trader as long as you put some effort to pay attention what is happening to the market. It will definitely benefit you, which I was being benefited as well. Alright, so let's take a look what is happening. On last week, which I mentioned, a couple of things to take note. It's a really rough week for US market. Only when it comes to last Friday, the market slightly recover. Alright, slightly recover. Or we can say a technical rebound after a sharp fall, right? So is market out of the so-called technical corrections or a 10% corrections? We never know. But it's a good rebound. A lot of people actually took into positions basically on this small rebound. It's very dangerous. We will look at the chart later. Alright, so before that, let's see what I have shared on last Friday itself. I mean the week before, on the 9th March, I said that S&P recorded the worst week, am I right to say, down for 2.4%. This is all pre-preparations to you. What do I mean by that? If you look into the even 1 week earlier, I did mention on Dow to watch out for immediate support 43,000, may want to fill the gap. We are still buyers on the bearish side. If you look at the chart which I'll be sharing, I'm pointing a lot of downside. So hopefully you guys did not enter impulsively because you try to buy the dip. Alright, there may be a lot way deeper. And not only on that, on 9 March I mentioned that there is a lot of tech stock at the key support level like Amazon, Google. It's all around 200 days moving average. So if the stocks fall to the 200-day moving average, technically to say there will be rebound before it fall even lower. That's why what is happening on last Friday, most of the stock rebound, and that is why we see Nasdaq actually bounce higher. But overall, from the chart, has it get out from the bear side? We'll dive deeper into the chart later, where we touch on the charting part. All right, so let's go to what is happening on last Friday. So this is what I mentioned, right? Last Friday is a relief bounce. All right, it's a relief bounce down pop more than 650 point, but overall it's still the worst week since 2023. So these sentences now pops more than 650 points. Actually, not to forget, the whole week it has been dropping. Up 650 points is nothing. Alright, especially when Dow is running at 40,000. It's nothing at 650 points. So don't be too optimistic of the market is rebounding back. Of course, there's some key support level. That's why it make this rebound. Alright, so but overall, are we out? I'm not sure. Let the chart tell us. Alright, we don't anticipate. We trade according to what the chart shows us. So this is what I mentioned, right? Most of the counter or the tech counter is at 200 days moving average. So technically, there will be a rebound from here. As you can see, Nvidia share pop up, Tesla share jump nearly 4%, Meta close, Amazon and Apple also rose, which I say is common. It's common. This is already prep view, right? Amazon, Google, Broadcom is all testing 200-day moving average. Tesla is the one which I mentioned after break 250 followed by 225. So Tesla touched 225 and rebound back. I'm not sure how many of you caught it up. This by right Tesla is a very volatile market right now, very volatile counter because of Trump, because of Elon Musk. The thing is that if you do not hold any Tesla in your portfolio, you want to start accumulating. Getting a price of 250 or 225 is really fantastic. Of course, look, I mean, it's not all war chest in, not everything in. Use the DCA dollar cost averaging to have your first buy at 225 or 250 is really kind of like good price currently, with Trump being the biggest advertisement for Elon Musk, right? We see what happens at the White House promoting and buying the Tesla car, right? So it's good to buy a little bit on Tesla, but don't go all in, all right? Don't go all in. So indeed, every Friday rally couldn't be spared. The three major average from weekly losses, all right? So overall, weekly, the market is still not performing well. Okay, so a lot of write-up over here. So let's go to the chart next. So for the chart, this is down. All right, this is now. Dow, Wall Street, which I mentioned on 9 March. Can you see that? Immediate support 43,000. Immediate support is for 43,000. This is 9 March. Okay, so 9 March. This is 9 March, which I posted. So on 10 March, when the market trade, it went even lower. So 43,000 is an immediate support. A break below could push this lower, whereby on the 9 March itself, 7 March, the market closed at 42,700 plus. So it's already below the immediate support already, which I mentioned on 2nd March. Do you see that? Alright, on 2nd March, I say 43,000 is the immediate support. It break, but it tried to recover to near 43,000. Then the following day on Monday, the market couldn't hold anymore and it continued to go lower. Alright, consecutively for the 4th day and then the 5th day slightly rebound. Rebound 650 point after the 4-day shutdown is nothing. And take note, this is what I mentioned. If drop out of the lower boundary, this is the channel. Do you realize this is the channel? First break, you break down, break 43,000. Second, this is the double top, which I mentioned. Alright, which I mentioned, a double top formation since November 2024. The support level is at 41,500 and 42,000. These so-called a channel, alright, a support channel, is the neckline of this double top. The moment it break below, it's not going to show a good sign. And if you really break all the way below, we are looking at 40,000 as the next major support. So the price go even lower, but when it touched near 40,600 plus on a Friday, it rebounds back. But when it rebounds back, it rebounds to where it used to support, become resistant near 41,500. So on the coming weeks, right, like I say, I wouldn't be surprised to see a slightly rebound before we head down lower. But we don't anticipate, right? We try to trade what the chart show us. So if let's say we use just a simple line, if the price did not go above or even cut above 42,000, all right, if the price did not cut above 42,000, not showing a very good sign. It is well resisted by the neckline. We may see more downside. in order to break or to make this double top or to negate this double top, that means it does not form successfully, the price need to quickly go above 42,000 and above the 200-day moving average. Then it's a good sign. You get what I'm trying to say? Alright, otherwise, watch out for 42,000, this sign when it is resisted by 200-day moving average. If the price reaches here, couldn't break, and then come down, we may see more further drop, and 40,000 is where we are looking at. Okay, from my stance, I'm still looking at more on the downside with Trump controlling the markets, a lot of uncertainty, and we know investors don't like uncertainty. Okay, so be careful. If you want to buy the dip, hopefully there will be deeper. Hopefully not deeper. All right, hopefully not deeper. Otherwise, be cautious of your portfolio. Okay, so that is what I'm sharing for Dow Jones, which I shared this on 9 March. So I'm not sure how many of you follow. Next, we will be looking in S&P 500. So let's take a look at S&P 500. There's a lot of saying in S&P 500. All right, S&P 500. This is what I'm going to draw. Very simple chart. Okay, so S&P 500 right now it break, right? Also there is a double top. If you realize there is a double top as well, it break, but price is really supported by this 50 days moving average. Do you see that? How can it be so in coincide, right? I mean, how can it be break already, then it recover back, supported by this 50 days moving average? How can it be so coincide? Correct? The market bounce, touch, go up. Okay, coincide. Right now, this daily chart, 200 days, still trading below 200 days, but on the weekly charts, is supported by 50 days. Okay, take a look on this. When we say the market dropped 10%, this is the 10%, okay, from the top to the bottom here. This is called technical corrections. Technical correction, drop 10%, the market enter into a technical corrections positions. But will it be possible that it drop another 10%, make it a 20% drop, and then the news will announce S&P into the bear territory? When the market drop 20%, it's not correction anymore. It's considered the market or the S&P index goes into the bear in trend or the bear territory. Alright, you can go and Google 10% versus 20%. And so coincide, if the market really dropped to 20%, we are looking at a price near 4,888, making a round figure 5,000. Next thing is also well supported by 200 days moving average. It can be possible. Alright, by the time when it dropped 20%, it is near the 200 days weekly chart 200 days moving average support, and it can be very close to previous support area, very close to previous resistance area. Do you realize? So this is very crucial. Will it be possible for S&P to go into 20% drop? I see why not. Why it made me so confident? Partially is because we know that what's happening to Warren Buffett. Warren Buffett, the biggest index believer, sold all his S&P or the SPY ETF stake before this drop. He sold everything out. A 96 or 97 years old, so smart, intelligent investor, one of the person who I respect the most, he won't be doing something foolish, right? We know that he's holding tons of cash on hand. Why will he do that? Think about it. Will he do that for just a short sell-off, or he see a longer sell-off before he pick it up? This 20% move to him will be significant enough. 10% I don't think is what he's eyeing for. Alright, so that made me kind of like believe that it's more correction for S&P 500. But of course, for the coming weeks, we need to make sure before this 20% realize the chart or the candlestick have to drop once again below 5,005. So watch out for 5,005. If the candle continue to come and drop below it, then we may see chances it will reach the 5,000 next level. Alright, so I'll just simply write, bear with me, 15 March 2025. Alright, watch out for coming week if price drop below 5,500. Okay, if price drop below 5,500, then the bear may continue and final support should be around 5k near weekly 200 days moving average. This consider a 20% drop from the peak or all-time high. Okay, so this is what I'm going to tell myself. Okay, so we'll be looking at it. If only it dropped below 5,005 for the coming week, then this is what we'll be looking at. Okay, so that is my view for S&P 500. We need to see it break below 5,005. So this is support. Okay, so just watch out over here. Okay, next thing, let's take a look on certain counter that we will talk about. US oil. Okay, US oil. For US oil, I'm not sure how many of you following from the start of 2025, 5th Jan. I'll be talking that oil will come down. 5th Jan, where is 5th Jan? 5th Jan is somewhere here. Okay, 5th Jan. Fair enough, 5th Jan, since here. Okay, 5th Jan. I'll be talking oil trap in this descending triangle. Breakout will show either side, but I remain neutral currently. 18 Jan, watch out for false breakout. Not to forget Trump, the slogan, drill baby drill. Alright, this is all historical replay again. 26 Jan, I mentioned, continue to bias downside, and 26 Jan is here. Alright, what happened? All the way down to the support area, which is supported at $66. So you can see the price is well supported many tremendous time. Okay, right now we know that the economy is not good. Demand has not picked up. But I won't be surprised to see technical rebound when it hit the major support area. So I won't be surprised even when the price go up, you will still be well resisted and then come down over here with the current market economy. So for that, somehow, if inflation is going to be in play, oil can be kind of like affected by the inflation as well. Of course, gold is the perfect scenario to fight against inflation. That's why gold went to 3,000. But oil is an essential stuff. People still need to drive. Alright, factories still need to produce. Yes, consumption may be low, but it still have some user demand there. So I won't be surprised for oil to have temporary relief to jump back up. But we should continue to monitor this descending triangle. Only if we break above, then there is something that we need to monitor. Otherwise, we continue to play with the trend, not to short it right now because you are shorting at the discount, where the RSI is actually at the bottom, is actually at the support. We try to short only when a significant pullback, then we short it and ride with the trend. Alright, otherwise some people want to trade breakout strategy, only when they break below, then you short. But my strategy is always more conservative. I want to pull back, and then I short at a better price. Okay, so I'm still biased on the downside, but there may be temporarily relief on the upside. So 15 March 2025, we may see oil go up after hitting the support level around at 66. Okay, so typo. remain bearish for oil unless it broke or it break above the descending triangle. Okay, so this is my view for alright, this is my view for oil. We may see some upside before it go down. So in order just have to draw some nice video. So this is what I'm looking at. Okay, since the demand is not there, then you may want to watch out for oil. Okay, next thing, let's take a look at Tesla. Okay, since I mentioned in my writing, but I didn't mention in any video, so I know. So 9 March, which I mentioned. All right, let's take a look. Okay, 9 March. What did I say? Right, 250 followed by 225. Where is the lowest? Low went to 217, closed at 230. So the price did touch 225, right? This is the 225 Fibonacci level support. Price touch, bounce back. Correct. Price touch, bounce back. Okay, so I will be surprised after touching a key support level and it bounce back. But this bounce, does this mean that Tesla is out of the downside? No, this bounce is actually kind of like a good support level for people to accumulate or buy the dips. So maybe there's a lot of Tesla fans supporting, buying at the real dip, but will it go even lower? Yes, possible. So please plan for your trade. There's many levels for you to pick it up, but ultimately, if it fall below 150, that is where the warning sign should really come in play. Otherwise, every dip is a good opportunity to buy. So let's take a look at the weekly chart. Like it zoom. Okay, zoom in. Okay, so we are done. So we can see this is the support previously. Price drop below, touches the real support at 23%. Fibonacci level 235 around there. Bounce back up, bounce above the 200 days moving average in the weekly chart. So in order for Tesla to really come back, we are very at a very crucial area. Hopefully it can bounce back from here, okay, and quickly go above this. Otherwise, it's not that optimistic for Tesla. We may see further drop, but I sense or I feel, alright, we want to say predict, want to say anticipate or whatever. Do your risk management wisely. If you want to pick up every drop or every dip in Tesla, if you're Tesla fans, don't buy too heavy in each dip. Alright, don't buy too heavily in each dip. Okay, unless it break above, come back to 300 above, then you can continue to ride with the trend. Right now it's below the trend, underwater, under weather, whatever you call it. It must come back as far as possible. Okay, if not, we may see continual dive, break below 225. The next support will be 200 psychological level. Okay, try not to break below 1.4 something, otherwise will be nasty. I can say will be very nasty. Okay, so I just do some writing over here. 15 March 2025. Okay, so this is what I feel. Okay, Tesla need to come back quickly, otherwise the bear may come in again. Support 200, drop below 140, 150, not a very good sign. Close above 275 to 300 will send some relief for Tesla investor. Okay, so hopefully 225 or the 217 is the low that we are not going to see again. But to me, I think unless Elon try to step away from the government, go back to the business, or otherwise, it's always otherwise. Okay, so that is my view for Tesla. But like I say, not to throw away Tesla for the year of 2025. It may come back fast. Why? Because I still believe uh, Elon is the Trump right hand man. He still need to help Elon, whereby how Elon helped him during his president elections, right? So not to forget Tesla, it will come back fast enough. Okay, so next counter we will be looking into a firm holding. Okay, I mentioned this alright, I mentioned this on 9 March. I'm not sure how many of you catch I know market is not doing well on the day after my recommendations. Monday it dropped crazily. But it dropped crazily also give you the opportunity to buy cheaper. True or not? If you don't drop, how will you ever buy discount? Just that, are you confident enough to load? So let's take a look. I did mention weak support 45, strong support 85, major support 30. So last week it go to low 44. Is it near the weak support area? So if you believe 44, 45 should be your first DCA level, right? First DCA level. So if you load it at 44, when you go to low or even 45, the market last week closed at 50. You should be in $5, slightly better, all right, or in the money at the moment. I'm right to say. So we continue to monitor this and how will it pan out. We will stay tuned for 2 more weeks later. Okay, so 9 March, 15 March. In the money, ITM, all right, in the money. Okay, so let's monitor weeks later. Okay, so that's my view for Ephraim holding. Okay, next thing. Right, so what I do, which will be the last counter that we want to monitor, is actually Walmart. Okay, Walmart, Walmart. Okay, Walmart. This is very long ago. I don't want to see. Okay, 2023. Don't want to see anymore. Okay, so Walmart. Let's take a look what is happening to Walmart. So on the daily time frame, we can see that Walmart has dropped. I mean, most of the counter dropped. Today will be slightly longer since my last video was quite long ago. Walmart have dropped close to 20% from the top, close to 30%. Enter the bearish territory. Okay, but even though it dropped 20%, it is well supported by the 200 days moving average. Do you see that? Oversold, meaning to say we can buy at a premium. Buy at the discount, right? Well supported by the discount. Okay, so this candlestick kind of like showing some good sign. So we need to see the falling candle where it show a better sign. But my take is that if the whole market sentiment is still not strong enough, we may see slightly a little bit more drop from Walmart, or we can get a little bit more discount. But if you think of missing out this opportunity, you can to buy your first dip at this price right now. Alright, that means you can take action right now. Okay, why do I say that we can see a slightly more dip? On the weekly chart, okay, we can see that the 50-day moving average still have some room to go, if you realize. Okay, still have some room to go. So the RSI is still ticking down, the selling volume is still high. So it may still have some room for it to drop, and it may coincide with the 61.8%, which is the round figure of $80. Okay, so my take is don't too hurry to go in if the market sentiment is not good. But Walmart, people say this kind of company is a defensive company. When we come to market recession, all these, there are certain defensive counter that you should own, and Walmart is one of them. Used to be a defensive counter as well. That is for my own take, own belief. So what will I do right now over here? 15 March. If you are FOMO, alright, fear of missing out, you may enter, you may buy at the current price around, what is the closing price? Around 83, close at 83, 85, alright, which is near the daily time frame, 200 days moving average. However, I am still biased on the downside, small room to go. Alright, eyeing at the next support level around 80 before my first DCA entry price. Okay, so that is what I'm looking at, and we shall see whether will it come out by next week or not. Okay, so I am biased on the weekly chart. Okay, $80 equal 50 days moving average support show in weekly chart. Also 61.8% Fibo support level, round figure level. Okay, so that is my view for Walmart. Okay, I'm still slightly a bit biased before we go higher. So we need to have some downside before you go higher. Okay, this is what I mean. Alright, that's all for Walmart. Okay, so of course there's so many counter to share. I'm not going to touch everything else. So stay tuned with my Telegram. If there's anything that I need to update immediately, I will always drop a text there. Or otherwise, please remember to follow my TikTok as a support. I hope to see more followers over here. I'm not just going to post my P and L profit again over here. Definitely, I'm doing some experiments. There's projects coming up. I need to show all this at the initially. Subsequently, I will show so-called market insight, short insight, certain counter to watch. Like example, Walmart watch. Put into this video, then we review the next 40 weeks. So here will be a more shorter version, not like the whole YouTube. You need to listen to everything. But of course, I will try to do a weekly video again that I will post in the TikTok. If you see this TikTok 1 minute or 30-second post, you like this counter, watch, relate back to the video. Otherwise, not many people like to watch this 30 video in nowadays. Okay, so a lot of people are swiping TikTok. They just want a short attention. What's going on? Tell me quick and fast. That is why I go into TikTok already. Okay, I be very slow. So sorry and pardon me. I am a one-person man. Okay, so that's all for this week update. Hopefully you guys enjoy, and I shall see you guys weeks again. Okay, goodbye.